Hey, good morning, everybody. This is Vance Williams out of the Seattle, Washington area here in the U.S. Welcome to my morning Forex trading show. It looks like the market decided to bet on that next leg down on the euro, and we'll talk about that and why I didn't catch the move. Just real quickly, be sure if you're watching the show, when you click play, make sure you click be part of the conversation right there. And when you do, you can actually follow me on Twitter, know when these shows are going to happen. And you can also get my free books here by clicking on this link, going to my website, and you'll see that here. You can get the free books right here, 8 Things They Don't Tell Forex Traders. We've had tens of thousands of downloads of that. People love that book. And then there's also another book for you, too. If you're interested in some of the best training in the world, take a look at our 3 packages we're going to be releasing here pretty soon. All right, let's move on from there. I want to stress that I do this show for your educational purposes only. You'll see that I predict price movement with incredible accuracy, but knowing which way price is going to go doesn't say anything about managing all of your risk, and it certainly doesn't say anything about your execution ability. So please, this is for education. In fundamentals today, we had the ADP that just came out a few minutes ago. That's ADP non-farm. Looks like the pound's getting a little bit of a lift off of it. The euro doesn't seem to be concerned with it. It was a little bit weaker than what they were anticipating. So it's kind of a neutral conclusions about that data. So we're kind of past that. Now, keep in mind, I just want to say something about trading data. When your trade data that many are thinking that it could be hyper volatile, like ADP, non-farm information that we're looking forward to in terms of like coming up from the central banks. You got to understand that most retail brokers will not give you the price you want, but rather a range of a price. In addition, brokers who trade a lot on their own books will, with variable spreads, can stop you out with a chart price moving not so much as a pip or two. Okay, and the reason why this happens is because if you're selling and a large number of traders pull out their buy orders, that drives the spread way up. So I mean it can move as much as 20 pips in a minute as traders pull out their buy orders. In other words, you're a seller and you want the best buy price they have, but the best buy price they have just moved way up, right? So what I'm saying is that you really need to know that trading during something like ADP or non-farm, or when we're anticipating central bank information, it's exceptionally risky. Even if you are fantastic at what you do and what you can see, how can you possibly manage the risk if you can't get the price you want? So definitely keep that in mind. We do have central banks in the United Kingdom and the Eurozone that are going to be speaking on Thursday, followed by, again, non-farm on Friday. So it'll be interesting to hear what Carney and Draghi have to say tomorrow. Now, with respect to me not selling the leg down, let me get to the euro here. It says it started that next leg down. If I go out to 4 hour, you'll see it breaking through that low, that 123.67 I had marked. And so with respect to me not selling it, this gives me the opportunity to share that. I did see the selling pressure. If you read my high impact data last night, I saw the selling pressure, but the reason I didn't sell is because the information I look at did not give me the heads up to get into that medium term position. I've been seeing this as a period with increased risk. So that's why I missed this most recent move down, and that's okay. And the point I'm making here is that you can only choose the best criteria, for yourself for trading. And if you remain open from day to day to changing criteria, it just won't work. So you have to be sensitive to market changes, but you have to also go with what works for you is what I'm saying. So be careful of that. One of the most important things that you can do as a Forex trader is know when you don't know. And it's a balancing act because of our desire for pips, our desire for profits. It is a balancing act. You've got to get to know that part of yourself. You got to say, you know what? Here's what I look at, and here's what I don't know right now. And how are you ever going to know what you don't know unless you're actually basing your trade on something specific, right? So hopefully that'll help out. We still have some high impact data coming out of the U.S. at 10 a.m. Coming up in about 90 minutes. This is likely to move price some, but it's not really usually anticipated as a major market mover. In major bank trades this morning, I can't see all of the information going back over time since I've been watching, but it looks like two of the top banks were still in the euro dollar to the downside. And I can see that now because one of them lowered their stops on the euro dollar to 124.70, locking in more profit. In addition, I now see that when they list their trades short term, they're not really short term trades. Sometimes they're medium term or long term. Still not any new positions, at least by those who appear to be the best at what they do. So I continue to see this as a period of increased risk. Okay. So let's, before I talk about today's price movement, I want to show you, if you watched yesterday's show, I want to show you what you saw me doing. I'll deal with the euro first. Then go back to yesterday. When we were on the show, we were right at this arrow. Price had just moved down from here to here. It actually was from here to here. It was only about 16 pips. And I said, that's a really weak range of movement. We like to see 18 to 20 minimum. So when you have that weak of movement, even though it's clearly coming through this 124.27 level, and it's tested it once. See that? See how it drops down? I'm not going to zoom in, but you can see black and white. By the way, I use these colors to help people whose eyes see colors differently. They've told me over time that everybody who sees a little differently sees these colors pretty well. So that's why I use these colors. So your risk is increased when you're trading within the range of noise, which I think is under, 17, 18 pips. And so I said specifically, if you watch the show, I said our traders would want their stops above this level. And so I said most people would not be able to take that trade, but someone who had a lot of experience could. If they put their stop here, they could get it and then get out pretty quick. So that was one potential trade. I don't see anything. This is a lot of chop coming through here, just a lot of chop. So I don't see anything that followed there, at least yesterday. Now, yesterday on the pound, and you'll see this area I have marked up here. I'm gonna zoom into the 5 minute so that you can see price coming down through this level. Let me go back in time. Now, where we were at the time of the show is right here, about 8:25, right around here. And so what I said is at that moment, if you watch the show, it says we are in a position right now where this price has made a move without a 38.2 pullback or better. And so we were looking at potentially pulling back to 38.2 or 50%. It came right in the middle and then a second push down in this direction. So some of our traders caught this trade following the show yesterday. So not too many people follow what I say very closely, but if you're really serious about Forex trading, you should, and you should learn these techniques. You can master the Fibonacci tool so you know exactly how to use this fib tool, and it's going to show you when the buyers or sellers have an advantage and how strong that advantage is, and it's going to show you where they're really taking new ground, and that's what's important. You got to be able to tell when there's a new event taking place. Otherwise, you're just, you may be trading stuff that happened yesterday, the day before. All right, so let's move to current price. What do I want to do first? The euro. Let's go to the euro. So back out to the 30-minute. Again, I don't trade 5-minute charts. What I'm looking for is the human behavior, and sometimes you can't see it on the 30-minute. Okay, so the euro, let's drop down to the 5-minute and see the behavior as we come through this really important level here. Let me zoom out a little bit. Oh, okay, 123.67. All right, so let me get back over here. Now let me drop to the 5. All right, so here's what I saw. As it came through that, on making its next drop, what I'm seeing here is it comes through, drops down about 19.6 pips. Now, potentially there was a trade there if you got your stop above this barrier. You had a pullback, and let me get rid of this just for a moment so you can see better. You had a pullback to just a little bit more than 38.2. It might have, I can't see it. It might have pulled back a little bit farther during that 5-minute candle, but you still potentially had a trade here coming through this strong level as it pulled back right in there. Okay, now the next move comes here this morning. Let's see. Yeah, that's about right. So the next move comes here. Let's see how strong that one is. 24 pips. Wait, I better double check this one too. That one's close, but this one's very clear. So the move is about 24 pips. Now notice it's getting stronger. So what that tells you, if it's weaker and then getting stronger, it's less likely to pull back farther. So they jump in at 38.2 and it drops again. This last move on the bottom, let's take this new wave where the momentum begins here. Oh, it kind of chops a little bit. Chops there, chops there. It's kind of hard to see, but even if you didn't think that it pulled back, notice that it's choppy. So it's showing a little bit of buyer opposition in that area. So it's more likely to pull back more, but it still ends up making a second push because of all this selling volume, which amounts to about 60 at the time. So where we're at right now is we're looking for about 123.22, 123.20. That's the area where the buyers and the sellers are going to have an equal interest. In other words, it's going to be about 50-50. So the sellers are going to have to push through that with enough strength to show that they're strong enough that we can get in and out with good risk management. All right, so let's drop over to the pound today. All right, so let me get rid of some of this stuff, at least this fib, because I want to put another fib on there. These reverse fibs where price is coming back the other way, this is something I have a lot of experience with, but haven't defined. You can see I had that defined at 56.93, which I need to move that down just a tad. Right there, you can see right there, boom, and it just came up. I actually had this number on there before. It came up, caught those sellers right there. Now, why is that? The reason why is you can see the moving averages turning over right here. And while the moving averages aren't always accurate, they're a pretty good reflection of the balance of buyers to sellers over the short term, whether that's 1 or 4 days. And so this 76.4 level always shows you like 95% of the time where this 50% area is going to be, where it's going to stall out. So this is decision time right here for the buyers. And you've got sellers who are still looking for this to go down, and they're just battling it out right here at 56.93. Now, if the buyers are able to get through here with some strength, they're going to basically discourage these sellers. And then if you get a pullback, you have a little bit of room going into 57.35. And this level here, I normally don't look that far back in time, but this level is so historically obvious. See that? Boom, 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 boom. Traders are just going to be paying attention to that. All right, so going back to the 30-minute, I'm just saying you're going to have some selling interest there. There's going to be some selling orders there. How do I know that? Because this is just what people do. And then, of course, this former high up here is probably going to have some sell orders sitting. So there's going to be sell orders all in this area. So I think you really do need to get in and out before you get to that area. As you can see now, these sellers that have been, long-term, let's zoom out, long-term selling the pound, they're not convinced yet that this is going up. Now, I can say one more thing is since London Open, which was about here, today's sentiment is bullish. And usually when you have a price, short-term price sentiment bullish, it usually sticks with the numbers. Or it sticks with that sentiment for the morning, usually. Coming through 56.93, I know our traders will want to confirm that moving average cross, but you potentially have got a trade there. If it comes to the bottom side, there's really a long ways to go to get down into this area. And then also you're followed by buy orders going to be sitting 55.97 all the way up to 5600. So, what does that buy orders mean? It just means if you're going to trade, you got to manage it differently. You got to know if there's buy orders sitting there and you're looking to sell, let them buy before you sell, right? Let it come back if you think you've got a trade. Personally, I think the risk is going to be great if you come right in, hit this level, and then try to sell because it's already been there. So, and also, by the time it got down there, it's going to be closer to London close, and that's going to change the dynamics and increase the risk as well. So, I wish I could say there was something better setting up on the pound. If it does move here above, then maybe. The euro, probably the better one to watch this morning. There's not going to be much to the top side. Let me zoom out. Not going to be much to the top side today because it's just going to take so much to turn this over. But to the bottom side, you got potentially watch for another drop below 23.22. Again, I just want to say, let me find my page here. Do look at my training options. Make sure you write to me with any questions. There's no risk in any of my offers ever. I deliver for 30 days, and if you don't think it's the greatest thing you ever experienced, then just ask for a refund. Here also just free books. This is going to really help you a lot. And then naturally, I post time-packed data with fundamentals each day and shows each day. So that's going to do it for me this morning, guys. We have one more show tomorrow. Members, I'll see you guys at 9:30 a.m. Eastern in our live trading room, and we'll watch the market together for a while. Everyone else, hope you got something valuable out of the session. Have a great one.